in relation to commercial substance. In today's video, we will explore the topics: meaning of commercial substance, significant changes in cash flow, application of commercial substance concept, examples of missing commercial substance. Conclusion. Let us begin with our first topic: meaning of commercial substance. General meaning of commercial substance. A commercial substance generally refers to a substance that is produced, bought, and sold for business or trade purposes. It can include a wide range of materials, goods, or products that are used in commerce or industry. Commercial substances can be raw materials, intermediate products, or finished goods that are intended for sale or further manufacturing. Meaning of commercial substance in accounting context. The term commercial substance is often used in the context of accounting and finance, particularly in discussions related to transactions and exchanges. In accounting, transactions involving the exchange of non-monetary assets are considered to have commercial substance if they result in a significant change in the cash flows of the parties involved. IFRS 15, titled Revenue from Contracts with Customers, outlines 5 criteria that a contract must satisfy to qualify for revenue recognition under the standard. Among these criteria, the prevalence of commercial substance in a contract holds particular significance. Our next topic is significant changes in cash flow. A business transaction is said to have commercial substance when it is expected that the future cash flows of a business will change as a result of the transaction. A change in cash flows is considered to be when there is a significant change in any one of the following, not including tax considerations. Number 1, risk. Number 2, timing. Number 3, amount. Let us discuss these one by one. Risk. A transaction can have commercial substance when there is risk, such as experiencing an increase in the risk that inbound cash flows will not occur as the result of a transaction. For example, a business accepts junior secured status on a debt in exchange for a larger repayment amount. Timing. A transaction can have commercial substance based on its timing, such as a change in the timing of cash inflows received as the result of a transaction. For example, a business agrees to a delayed payment in exchange for a larger amount. Amount. A transaction can have commercial substance based on its amount, such as a change in the amount paid as the result of a transaction. For example, a business receives cash sooner in exchange for receiving a smaller amount. Let us move on to our next topic: application of commercial substance concept. This principle can be applied to identify instances where a company engages in accounting or legal maneuvers that, while technically accurate, serve to fabricate transactions with the sole purpose of inflating revenue or profits. Such actions misrepresent the true commercial nature of the situation, suggesting the absence of genuine transactions. Consequently, in such scenarios, it is imperative not to acknowledge these deceptive transactions in the financial statements. Our next topic: examples of missing commercial substance, is really important. Let us delve into it. When commercial substance is lacking, it means that the transaction does not result in a significant change in the cash flows or economic position of the entities involved. Here are some examples of situations where commercial substance may be missing. Exchange of similar assets. Non-monetary exchanges without significant gain or loss. Debt restructuring without substantive changes. In substance, real estate exchanges. Swaps with no significant economic impact. Barter transactions without economic impact. Transactions with collusive intent. Let us look into these examples one by one. Exchange of similar assets. If two parties exchange identical or highly similar assets without any significant differences in their future cash flows or market values, the transaction may lack commercial substance. Non-monetary exchanges without significant gain or loss. In a non-monetary exchange, if there is no significant gain or loss to either party, and the assets exchanged are similar in terms of their nature, risks, and expected future cash flows, The transaction may lack commercial substance. Debt restructuring without substantive changes. If a debt restructuring or modification occurs without resulting in a substantial change in the present value of the cash flows or the overall economic position of the debtor and creditor, it may be considered lacking in commercial substance. In substance, real estate exchanges. Real estate exchanges that are in substance similar to a financing arrangement rather than a true exchange of properties may lack commercial substance. This can happen when the replacement property is not substantially different from the property relinquished. Swaps with no significant economic impact. Swaps or derivative transactions that do not result in a meaningful change in the risk exposure, cash flows, or economic positions of the parties involved may lack commercial substance. Barter transactions without economic impact. If entities engage in barter transactions where the goods or services exchanged do not have a material impact on their respective economic positions, the transaction may lack commercial substance. Transactions with collusive intent. If parties enter into a transaction with the intent to manipulate financial statements rather than for legitimate business purposes, it may lack commercial substance. Conclusion. It's important to note that the determination of whether commercial substance is present often involves a careful analysis of the specific facts and circumstances surrounding the transaction. Accounting standards, such as generally accepted accounting principles, GAAP, or International Financial Reporting Standards, IFRS, provide guidelines for assessing the commercial substance of transactions. This brings us to the end of this topic. Thank you for watching.